Hey everyone, welcome to another video by Optionables. Today is Wednesday, and as usual, we are going to have the expiry day outlook. So, we are going to discuss what happened to the market today and also what can be the potential trade ideas for tomorrow. So, today the market was very volatile. As you know, the market opened almost flat. Bank Nifty came down almost around 400 to 500 points, and then towards the end, it bounced around 300 points. So, it was very volatile, and that means we can also expect some kind of volatility in the expiry also. So I'm just going to discuss the potential trade ideas and also the market outlook for expiry. I hope you are excited for the video. Now let's quickly move on to the screen recording. Meanwhile, if you are liking the content on the channel, do not forget to hit the like button, share this video, and subscribe to Optionables. Thank you. Okay, so now coming to what exactly happened today. So in this video, we'll be mainly trying to discuss the market outlook for tomorrow, for which we have to understand what is the market structure today and also what exactly we can expect tomorrow. So if you look at the structure on a 3-minute time frame, or let me also increase it to a 15-minute time frame, right? So what you do see here is all the way from 18450, we saw some very intense selling in the market. So all the way from 18450, the market fell to 18100. And towards the end, we saw some fantastic buying coming, because of which we almost bounced 100 points from the low. So looking at this structure where we saw such an intense sell-off, and from this bottom, we have bounced almost close to around 100 points. So that means, have we made a bottom? Are we going to go up from here? The answer is still not clear. So if you look at the overall structure, so 18,450 was a very strong resistance. So I'll just show that to you by zooming out. So you can see this level was 18,450, and as I zoom into the charts. So you see here, previously on November 14th, the market came here. It faced some kind of resistance. Post that, the market broke out. And once it came down, it took support here, it took support here, it took support here, it broke down. And finally, this again acted as a resistance. Again, here we came all the way up, tested 18,450, and again we have come back down. So considering this, 18450 is a very strong resistance or a very strong hurdle which we have to get past. But if you look at the current market structure, the current market structure is very bullish. So there's very good buying coming at lower levels. Whenever the market dips, immediately you see the buyers rushing and end up buying the stocks. So considering this, right, so you can see that you have very good risk to reward trades as and when the market approaches 18,100 or in and around 18,100. Because if you look at this, previously also, this particular level of 18,000, 18,050 was acting as a good resistance. Then market has taken support here quite a lot of times, and we have ended up going higher or moving higher. So with this in mind, right? With a simple stop loss of 18,050, let's say the market today had come to 18,100, around 100 and 18,120, 115. So with a simple stop loss of 18,050, we had a very good opportunity to go long. So the risk to reward could be easily 1:2, 1:3. I simply ended up buying some call options in my own account. So we won't be doing option buying in the main account. So simply in my own account, I just ended up buying some call options of 17,800. 17,800 call option is what we bought. And finally, what I bought. And finally, the market also ended up recovering towards the end. So here, if you look at it, purely from the aspect of risk to reward, so the risk to reward was really good, given that there was only 60-70 points of risk to 180 to 240 points of reward, 1:3 or 1:4. So coming to tomorrow's market outlook. So all this is on a broader sense, but let's focus on tomorrow's outlook only, right? So if you are actually looking at that, we might have to come to a smaller time frame. And when we come to a smaller time frame, what do we see here is that the market is consolidating in the broad range. But obviously, we cannot keep this broad range as a very good or you can't keep this broad range as a range for an expiry day trade because it is almost around 400 points, and most likely Nifty keeping 400 point range won't be giving you any good reward, right? So we have to come in closer with our range even if we are doing straddles or strangles. So given that, it becomes quite challenging to pick a particular level or pick a particular range for Nifty, because right now you see that the consolidation is happening on a broader sense. So that's the reason tomorrow I would just avoid trading in Nifty, because I can't clearly pick a bottom or I can't clearly pick a top. So what do I mean is I can't identify points of support or points of resistance close by, because of which I would just avoid trading in Nifty. So now coming to Bank Nifty. So again here we saw a similar structure. So Bank Nifty, we saw a very good sell-off and then some very good recovery towards the end, right? So considering this, Bank Nifty, because it was more volatile, and also Bank Nifty in general has higher premiums, so we can consider shorting 43,400 and 44,100. So this is 44,100 level. So you can short 44,200 and 43,300 or 400. So this can be a potentially a far OTM short strangle, because again you see here the range is quite big and it would be hard for us to pick a good level. So otherwise I would also maybe prefer going to a 43,900 short straddle. So I would do a 43,900 short straddle given that there's a gap up, and I would be cutting my short straddle the moment we dip below this level of 43,780. But that is again going to be a risky trade and not worth doing. So I would again here stick to short strangles because they would be much easier to manage, given that the entire view of the market is not really clear or not really intact. So that is my take on this particular market. So tomorrow I might avoid trading Nifty because again identifying the range has become harder. On top of that, I might also end up trading Bank Nifty strangles because Bank Nifty straddles do look little riskier and strangles look much more safer. So with both these aspects in mind, the summary or crux of it is we are consolidating in the broader range. That's the reason picking an individual trend is still not clear. And also to go with straddles, the ranges are quite wide. So we would be going with Bank Nifty strangles. That is the summary of the entire outlook for tomorrow. I hope you found this video informative, and if so, then do let us know your thoughts in the comment section below, and also don't forget to hit the like button, share the video, and subscribe to our channel. Thank you.